Broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, Ron here at AbleSys. Welcome to the webinar. We'll take a look at the different charts and we're going to take a look at a swing trading stock chart. And then we're going to take a look at an intraday day trading chart, which we normally like to look at the E-minis, being that it's just so popular. And one of our good clients here, Skip, recommending the Russell, saying the Russell's been really good lately. It's been a little smoother than the NQ and the ES, and very profitable. So we're going to take a look at that one today too. And let's jump in and see what we've got here. This is Home Depot on a swing trading 2-hour daily guidance chart, combination of 2 hours, which is 120 minutes, daily combination. That works really well for swing trading. You know, you just want to check it a couple times a day because you're getting a signal every 2 hours, and especially good for option trading or of course shares. And I think you'll like this. It's very, very helpful. One I like myself a lot. So let's take a look. This is again Home Depot, and we're looking for that triple confirmation. We want the blue bar, blue dot, blue X. If all three got to come together, and the bar has to close. So the open of the very next bar, which would be right there, is where we're going to go long. Whether you trade shares, whether you trade options, that's up to you. But the software is telling us, hey, that's a long signal right there. Triple confirmation. It's got to have all three. You wait for the bar to close when the first time that all three agree. That's when we're getting into that trade. That's when the odds are greatly stacked in our favor. Stop loss goals, this is a stock chart. If it's ES, we put it a half a point under the bottom of the blue bar. If it's NQ, we put it 1 point. If it's Russell, again, 1 point under the bottom of the blue bar. But this is a stock chart, and a lot shorter time frame, a lot longer time frame. 10 cents. I mean, use your own judgment on that one. Just a little bit below the bottom of the blue bar. Never came close to hitting it. As soon as the triple confirmation signal came in, it just went up nicely after that. Each one of these black lines is a day. It's a day. So you get 4 price bars per day. Okay. Now let me look at this as we were looking at this live. What we're looking for is now the next thing we want to do is we want to move that stop loss higher. The key with winning and keeping your risk down is having your stop management in the right spot. You don't want to put it too close so that you miss out on a big move. You get out too soon. But at the same time, you don't want it. But you don't want it too far away where you have a lot of give back, meaning it shoots up and then it comes back down again, and oh wow, I gave back a lot of my profit. You say, well, what's perfect? Well, yeah, that's the $1 million question. But I think we got it figured out pretty well. We're looking for 2 green bars, or actually 3 green bars. Well, let me take that back. That's for E-minis. For trading stocks, you got to let that go. We're just going to use the previous lower blue dot. If you want, you can use 3 green bars. If you want to get in and out a little bit quicker, that's your style. Perfectly fine. You're going to use 3. The only thing I'd use 2 green bars is the NASDAQ, mini NASDAQ. Because the mini NASDAQ, that's a fast mover. Crude oil, gold, those really quick moving markets, you got to use 2 green bars here. What do you mean 2 green bars? Stop loss, just a few pennies. In this case, this is Home Depot, so we're talking about pennies, not ticks. This is not a futures chart. This is just for stock charts, the 2-hour daily combination, only for stocks. We're looking for 3 green bars. There it is, 3 green bars. We're going to put our stop loss just a little bit under this third green, the lower of the 3 green bars. See, the key is we want to just get that stop loss as close as we can without going too close. But the point is you just want to always get above break even. Now, once the dots go higher, above here, and we got in over here at 183, once the dots go higher, as you know, we always trail it to the second lower small blue dot below the price. So when the price is here, there's your blue dot under it. There's where we're going to put the stop loss. As the dots go higher, just go to the second lower row of blue dots. But if you see 3 green bars, well, we're going to move it up even closer, which is good because now we're protecting more of our money. We're still in the trade. Stop loss is right here. Second lower small blue dot below the price. There's the first blue dot. There's the blue dot closest to the price. There's the second step down. So you got a stop loss of about 188. We got in at 183. It's not bad. In a week and a half, we're up $4. Actually, we're up a lot more, but the worst we can do is make $4 on this trade. That's a nice feeling. You're playing with house money, and the worst you can do is you're going to make at least $4 on the trade. At the moment, we're up $7. We got our stop loss here, a little under 188. So the key is stop management. That's the key to everything. Knowing where to get out. Now, we know when to get in, the triple confirmation. Where do we get out? Where do we put the stop losses so that we don't give back too much money in case it pulls back down? Maybe it was way up high and it pulls back down. But at the same time, we don't want to have it too tight where, every little pullback we get out and then it shoots up 20 points. It's like, oh, I missed out on it. Well, we're trying to find the best of both worlds. Easier said than done. I can show you a better example here on the Russell chart. Because the whole key is not get beat up in choppy markets. And the NQ and ES were quite choppy today. But that's why Skip recommended the RTY, saying he's been trading this, and this one's really been working out well. So, longtime client of ours, good guy too. Let's take a look. So, obviously, we got the triple confirmation here, but that's pre-market. If you want to take it, that's fine. We like to wait till the market opens at 9:30 because that's a brand new session. So, if we're looking at this live, and it's 9:30, and it's 9:30 Eastern, so put that to whatever time zone you are in around the world, but I'm talking 9:30 Eastern. We've got a sweet spot now. There's 9:30. There's the pullback. It doesn't touch the blue dot, but, you're within a quarter of a point. We're not going to get too technical over that. So that's it. Now what I'm saying in my mind is I'm waiting for a blue bar. Next blue bar, I'm in. Because we came back down to support, and often the prices hit support, bounce off of it and go back up again. So now at the open of this bar, at open of the next bar right here at 1534.5, we're going to be long. Stop loss, just put it just a little bit under. You want to go half a point, perfectly fine. It'll always be right about there. Half a point below, so we're 3 points below, and that's a pretty long bar, but 3 points below, we got a $150 stop. That's about the maximum we ever have with AbleTrend. Now it's okay, well, what am I looking for now? Well, we're just looking for 2 green bars. And with the Russell being, it's a little slower than NQ, you could even use 3 green bars. Trade a preference on that one. If you're the type that gets in now really quick, put your stop loss a little bit under the second green bar. But otherwise, you're going to put it on 3 green bars. NQ, I would say 2. ES, RTY, I got to watch it a little bit more to be a little more confident in that. But anyhow, let's keep it conservative and go 2. And as it turns out, there's 3 in a row here. Half a point below the bottom of that green bar, got our stop right around 37 3/4 right there. See, we want to look, where can we move our stop loss closer so that we can guarantee profit, but yet still stay in the trade, because if this is going to go higher, hey, I'll stay in it for all day if it's going to keep on going higher. By the way, before we even got to that point, we're trailing it with the little stop dot, with the support dots. Again, not at the dot under the price, 2 steps down. So, for example, when the price is here, there's the blue dot below it, we moved our stop loss to here. So we had it over here at 31.5. Now we're at 33. Now we're at 37.5. This is getting fun now because I got in at 33. Got in at 35. A stop loss at 38. Now, the worst I can do is make 3 points. That's $150. That's the worst we can do. We're still not out of it. Okay, I'm looking for that 2 green bars. Again, you can use 3 if you want. If 2 would be a very conservative way to do it. Okay, basically it's the same price, so I'm not going to move my stop yet. Okay, there's your second 2 green bars. I'm going to put the stop right about there, right around 39. Remember, I'm in at 33. Yup, there's 2 in a row there. I can move the stop even a little higher. Now I got it at 41. This is getting fun now. We're in at 33. We're at 41. That's 8 points. That's $400 per contract. That looks like a stop out right there. So we'll stop that right there at 41, in at 33. Nice. It's $400 win right there. Okay. Sweet spot right here. We're getting right back in again. You say, well, now what am I looking for? I'm out, but how do I get back in? You get back in on a sweet spot. You got to pull back down to the blue dot and bounce off of it. There's the green bar. Ooh, look at this, 2 bars later. I'm saying, oh, I got a sweet spot possibility. With this next blue bar, if it turns blue, I'm going to go, that's a sweet spot. Bingo, sweet spot. So I'm going to get in at the open of the next bar. 41, we'll call it. Stop loss is going to go previous lower blue dot here at 40. I got 1 point at risk. I can live with that. See what happens. Stop that. Okay, we lost a point there. Made 8, then lost 1. Nice. Okay, what am I doing now? I'm waiting for triple confirmation. I'm either waiting for blue bar, blue dot, blue X, or red bar, red dot, red X. I'm not doing anything else until I get that. There it is. Triple confirmation. I'm long. Stop loss, half a point below the bottom of the blue bar. I only have 2 points at risk, so I can live with that. That's a fair place to play. Stopped out, lost 2 points. Okay? Got to take every trade because I don't know, you don't know. Nobody can see the future. Nobody has a crystal ball. You have to take every single trade. Valid trade. Every trade. Because if you miss one, you know what's going to happen. That's going to be the big winner that you've been waiting all day for. No trade zone, no trade zone, no trade zone. Oh, there it is. Triple confirmation. Short. Red bar, red dot, red X. Stop loss, half a point above the first red bar that had the triple confirmation. Okay, let's see what happened. Oh, there's the 2 greens. Now I can move my stop even lower and put it at about 37 3/4. Okay, well, I got in at 37. It's 37 3/4. Now I've only got 3/4 of a point at risk. That's like $70. I mean, in the trading world, not a lot of money. Okay, now the dots are coming down. So, for example, here's this red dot when the price was here. So I'm going to move the stop just a little bit lower because these red dot is slightly lower. So 37.5. The whole key is I got to put my stops in the right spot. Risk management. Okay, now you got these 2 reds. There's your next higher one. So now I move my stop even lower to 35. Remember, we're in at 37, 1537. I'm just calling the last 2 numbers. We're in at 37. We're down to 35. 2 points, $100. I got $100 locked up. Can't lose. Can't do any worse than winning $100. Oh, these dots are going lower. Loving it. Now I'm moving the stop to here, 34.5. Again, second higher red dot above the price. Not the first one, second. Now I'm looking for that 2 green bars or a drop of the red dot drop. Going lower. Now I got to stop at 33.5. I see 2 green bars. I'm really going to move that stop loss lower. Bingo, 2 greens. Just again, half a point above the top of the higher of the 2 green bars. Now I got to stop at 32.5. Remember, I got in at 37, 32.5. I got a good one going on here. And it doesn't matter what market we're looking at, by the way. It could be NQ, ES, gold, crude, British pound, anything intraday. This is for day trading. For longer term, you can use, the 2 green bars. I would use 3 green bars, or even better yet, longer term, you're not looking to be in and out, in and out. You're keeping it a little simpler. We're just going to use, the second lower blue dot or the second higher red dot for a short. Okay, dots are going lower. Now I'm at my stop at 31.5. Still looking, the thing I'm looking for, and I'm doing this all day, looking for those 2 green bars so that I can move that stop loss lower. Now the stop is at 30, 30.5. If I see 2 greens, I'm lower. I'm going to put it even lower. Oh, bingo, 2 greens. Okay, great. I can move it down to 26 now. Remember, I got in at 37. This is 26. It's 11 points. The worst I can do is make $550 here. That's the worst we can do. So I'm a $550 winner, and let's see what happens. Again, if you're using 3 green bars, it's the same spot. Perfectly fine. Stop out right here. Stop out. 26. Not bad, 550. Now I'm looking for a sweet spot or triple confirmation blue. But that's going to be a while before we get 3 blues. So the next thing I'm looking for is a possible sweet spot to re-enter the trade. Although I don't want to enter it 1 hour after I got in, this is 50 minutes, so that's okay. We can still get in. After 1 hour, I'm going to pass on the sweet spots because they're just not going to keep going down forever. Sweet spot, there's that red bar. Went from green to red. Tested resistance, bounced off of it. I'm short at 25. Stop loss is supposed to go with the previous higher red dot for a sweet spot. But if it's too far away for you, then just put it, the usual half a point above the top of the red bar. So 27, we got to stop. We're in at 25. Up 2 greens. Well, it would be the same place anyhow. Okay. Dots are going lower, so I'm going to move my stop. Second higher red dot. Whatever's closer to the price. Whatever is closer to the price. Whether it's the second higher red dot or the 2 green bar. The 2 green bar stop with half a point above the green bar. Whichever is closer. I want to keep moving that stop as close to the price as I can so that I don't have too much give back. But at the same time, got to give it a couple points room because this thing could go on all day. Who knows? You got to catch the big winners. If you don't catch the big winners, you're never going to win. You got to have 80% winners then to make any money. That's impossible. No system in the world can win 80%. Up, out, blue bar, blue dot. Well, that trumps everything. That means short term we're going higher. Okay, out at 26, but we shorted it at 37, $550. Okay, now obvious no trade zone. Short, stop loss goes right there. It's about a break even. Let's even call it a half a point loss. Now we're in the dead zone. I got to tell you, it was a great trade in the dead zone today. 9 out of 10 days, the dead zone between 12:30 and 2 Eastern is just a bunch of chop, and you're glad you didn't trade because you would have got beat up. However, got to be fair. Every once in a while, you're going to have a winning trade. Most days, you're going to save a lot of money by not trading between 10:30 and 2. However, today was one of those days where it actually was good in the dead zone, which is normally very choppy. But I just want you to identify what to look for. Let's say it's not the dead zone. Let's assume it's between 9:30 and 12:30 Eastern, or between 2 and 4. We only trade 5 hours a day, the best 5 hours of the day. This, of course, would be an absolutely textbook perfect sweet spot if it wasn't in the dead zone. Comes back down the price, hits the blue dot, stops, bounces off of it, and here's the key. The bar goes from green back to blue again. The open of the next bar right there, we would be long, and then that one took off. There's your 2 green bars, and if you want to use the 3 green bar, then you would just have your stop loss just a little bit under the lowest of the 3 green bars. And you know what? It never hit it. It came close, turned around, and shot back up again. Here's your 3 greens. Now your stop loss would be here if you're in the trade. And then looks like we're going to be stuck there. Oh, it kept on going higher. We'd be out on the red bar, red dot. So, yeah, that one was a nice trade. It was about 5 points on that. But it was in the dead zone, so we're going to leave that alone. 2 o'clock is when we're going to go back in again. Well, it's a little before 2, so technically speaking, no, that's not a trade. Here's a sweet spot. Now it's 2 o'clock. Now we got the sweet spot trade. We're looking at this, and it's 2 o'clock. Right here, it's 2 o'clock, 1400, 2 o'clock Eastern. Now I'm saying to myself, ooh, possible sweet spot if we get a blue bar. Look, it just touched support. So in my mind, the first thing I'm thinking of, sweet spot, if we get a blue bar, I'm going, I'm buying at market at the close of that bar in 37 and a couple ticks. Stop loss right here, a little bit under that blue bar. 2 greens, stop loss here. If you're going with 2 greens, you're out, you're broke even. If you're going with 3 greens, and that's your trader preference, stop loss would be right here. Well, either way, there's a sweet spot. Again, the price is hit the price. That's the sweet spot. But my point is, my radar is looking for the sweet spot because the prices came down and touched the blue dots. If it hits the blue dot, bingo! First thing you're thinking of, where's next blue bar on then? which turns out to be about a break-even trade because we're out over here. Okay, no trade zone. Now we're short. Triple confirmation short. Stop out right there. That's a break-even. But now you're back in on the sweet spot. Again, if it hits the red dot and it goes green to red, once it hits the red dot, right away you got to say to yourself, well, I'm waiting for the next red bar, and I'm in. That's a sweet spot. So we'd be short over here, and we'd have our stop right there, a little bit above that second green bar. So when the price went zoom over here, well then now we'd be out of that trade. Now we're going long, triple confirmation long. There's the third green. Stop loss would be just a little bit under that. No, we'd still be in it, but let's say you got stopped out here. We actually didn't, but I always take the worst case scenario. Once you see this happen and you're looking at this live, because it's going to look like this, it just about touched the blue dot. Now a blue bar, I'll be back in. Blue bar, I'm back in. Okay, boom, in. Stop loss here. Under the blue, right, just a little under the blue bar. Ooh, nice. I can now move these. The dots are going higher. So there's the 1, 2. There's the stop there when the price is here. There's your dots, first dot, second dot. It's about where I got in. So now I'm at break even. Oops, stop dot there. Okay, break even. Oh, I'm done. But hit the blue dot. Again, green to blue. Sweet spot. I'm back in. Looks like about a break even. No, we wouldn't be ticked out. We'd be in it. Stop loss would be here, and we're out on the red bar here. So that's a break. Maybe made a little. We'll call that a break even. And now it's 4 o'clock. The market's closed. Okay, so I did a little differently. I showed you as if we were looking at this live. Pretty cool stuff. Pretty cool stuff. But this is exactly how you use it. This is what I talk about every week for months and months now. Just showed it or teaching it in maybe in a little different way. Just wanted you to see that. Got to take every trade. That's the problem. You're going to run into 2, 3, 4 losers in a row. Could happen. Don't skip the fifth one. You know what's going to happen. It's going to be a 20-point win. Mike says, any luck with bonds? Yeah, you probably heard me say it a million times, Mike. It doesn't matter what you trade. You just have to be consistent and stick to the rules. You have to be consistent and stick to the rules. You have to have no emotion. That's the hardest part. Steve, good question. Sometimes he sees on the higher time frame, you get the blue, red, or blue X, and then it disappears because it has 3 minutes to make up its mind. The price bars never ever change after 1 minute. The X's never ever change after 3 minutes. So here's the rule on that one. If the price is if you're going long and you have like blue bar, blue dot, blue X, if the price is above resistance, for example, like right here, you're in the trade. You take it if it's above the red X, if it's above resistance. The same way we would go short if the price is below the blue X and you have the red bar, red dot, red X. If it changes, so be it. You're in the trade. Just manage it like normal by putting your stop loss just slightly under the bottom of the blue bar. But that's a good question because it can flip-flop when you're at that inflection point, when you're right on the cusp of which way is it going to go. Well, if the price closes, like right here, that's the close. That's why we use open, high, low, close bars. If it closes just a little bit above that red X, yeah, you're taking it because you've cleared resistance. That doesn't mean it can't turn around because the X's or the higher time frame has 3 minutes to make up its mind. The price bars will never change after 1 minute. The red X's and the blue X's will never change, but it has 3 minutes. And when you're day trading, that feels like forever. Hard to predict. Yeah, that's how we do it. That's the rule we go by. If it's above the red X and it closes, the blue bar closes above that red X, you're in the trade. So this way that's the way to do it. Drew finds it difficult to time the entry when the 3 minute is flashing and doesn't print till 3 bars later. Oh, great. Okay, that was the same question. Yeah, so I answered that question right there. If the blue bar, and this is a perfect example right here, if the blue bar closes above the red X, you're in the trade. And the same way when we're going short, if the red bar closes, let me give an example. Here, if the red bar closes under the blue X, and if it, now you say, what do you do when it's right on the X? Well, flip a coin. No, we got to make a rule, and you have to stick to the rules. That's why it's very mechanical. There's no thinking. The whole key is to put your emotions, leave your emotions aside. I know that's hard, believe me. That's the hardest part of it all. But you can't win if you're going to be emotional. Don't even trade. Forget it. Don't do it. Just put the money in the bank. Go on, take the family on vacation. You know, do something good with the money because you'll just blow it. If it's right on the blue dot, a blue X like this one right here, this example, and you have obviously triple confirmation right there, that's a tough call. But so I'm going to leave that up to you on that one. But if it's under it, even if it's just one tick under the blue X, you're short. If it's right on it, you can make up your own mind on that one. That's about the only thing that you make up your own mind with AbleTrend. Otherwise, it's extremely mechanical. There's no thinking. Ron, the Tuesday, Thursday sessions recorded, Nico, they're recorded for the last 10 years. Yes, I've been recording them. They'll go on the website in a couple days. They're all recorded. Mike, how many green bars will you allow before it turns to red-blue? At what point are you concerned about congestion? I don't understand that question. How many green bars will you allow before it turns to red-blue? Mike, the rules don't change. You're twisting it. The rules never ever change. It is what it is, and it just there's no changing. If you do an NQ, you get 2 green bars. You're putting a stop loss 1 point under the bottom of that green bar. If you do an NQ or ES, you might like 3 better. If you're the type that gets in and out quickly, use 2. But whatever you use, you have to stick with it. Whatever you use, you have to stick with it the whole day. If you have several greens at speed spot, will you take the trade? No. It has to be a blue or red bar. I've been saying that for 15 years. That has never changed. I'm not sure where you're getting anything different on that one. No. The rules never change. Never. You have to be consistent. You can do it. Anybody can do what they want with their money, by the way. But if you're following the AbleTrend rules and you want to have a chance to make a lot of money, you stick to the rules and you be consistent. You won't get the red X unless it closes. That's true. Yeah, you might not get the red X, but if you have the red X at the time that you're at or below the blue bar, let's call it if you're at the blue bar, you're in. If you're at the blue bar, certainly if it closes under the blue X, you're in. If it closes at the blue X, you're in. Regarding place to stop, is it half or 1 point below above the bar? It's half a point for ES, 1 point for NQ. Russell will use a half a point. Do you still have to place the stops over the dots? Well, yeah, whichever is closer, Michael. If the second dot away from the price is closer than the 2 green bars, then you put it there. But almost always the 2 green bars are going to be closer. Whichever is closer to the price. You want to get that stop loss closer to your price so that you lock in the profit. I'm using the small dots as protection. If we are close. Again, whatever is closer, you're twisting the rules around, you're changing things. I don't change anything. You have to be consistent and you have to be a robot. You have to be a robot. No thinking, you're just a robot. You're just like a mechanical robot. Like Michael does in the options money maker trader room. And he trades AbleTrend exactly the way you should trade it. He does a fantastic job. If anybody wants to get in on a live trading room, options moneymaker, and he does a fantastic job, and a great guy too. 1516, Michael Z wants to look at. 1560, would you put the stop below the dots since there is a small wall of dots there? 1516, all right, 32, 22 minutes over, but I'm going to stick around. 1516, not sure what there is to think about there, Michael Z. Your stop loss would be a half a point below. So if you're using two green bars, you're stopped out. If you're using 3 green bars, a half a point below 1516 is like right about on the dot. So if you're right on the dot, you go one tick under that, so you have protection. All right, I think we're good. Yes, you're right, Anthony. Michael is Michael's going to love this one. Michael K. in the OMM room. Anthony says Michael is an outstanding human. He certainly is. You got my vote on that one too. Michael Z. Yes, that's what I meant. Yes, sir. You can do that, Michael Z. Yes, if you're that close, yeah, you give it a little extra. A tick or two, give it extra protection. Steve says thanks. You appreciate your help. You're welcome, Steve. I'm always glad to do that. I take this very serious. Middle of the night, I wake up thinking about this stuff. I'm just trying to make it better for you, me, and everyone else. I'm on a mission here. Michael Z, you're the best. Thank you, Michael. You're a great guy. I work with some great people here, and I mean clients. Besides everybody in AbleSys that I love, the clients that I work with, everybody in the room here, super people. Love it. Can't do enough for you. I pray every day that everybody wins. Paul, thanks. You're welcome, Paul. Mike Z. Yeah, take a look at RTY. It's less whippy, exactly. That's why Skip's been recommending that. He says, take a look at RTY. It's less whippy. Wait, whatever's less whippy and smoother, I'm all for it. So take a look at it. Of course, watch tomorrow will be the choppiest day of the year. You know how that goes. But all I'm saying is, I look at a couple of charts at the same time. You can even flip-flop around. You can take NQ, and hey, now there's a trade on ES, take a yes. But as long as it's a triple confirmation, valid AbleTrend trade, perfectly fine. If you see RTY, a perfect sweet spot is setting up, or a triple confirmation trade, you want to go to RTY? Go to RTY. You're not doing anything wrong. You're taking a valid RTY trade. As long as it's a valid AbleTrend trade, you follow the rules, and most important, you put your stop losses in place. You're keeping your risk down, and you're stacking the odds in your favor. There's nothing more you can do. There's no ATM machine out there. I wish there was. Nope, nothing's perfect, but boy, we've got stop loss management, keeping the risk down, and letting the winners run. You just need that one good winner a day. That's the key. You need that one good one so that you're not going to lose on the day. But sometimes it's tough. Yesterday, a fantastic day. I mean, yesterday was one of the best days of the year. I mean, it was unbelievably good. We had that one big, gigantic run that the software kept us in it the whole time. I mean, clients tell me they made thousands of dollars on that trade yesterday. I mean, I can't get enough of reading those emails. But then you get today, a day like today, it was quite choppy, and some of the other ones too. But yesterday was a day that you should have made enough yesterday to carry you through the week. It was that good of a day. If you just follow the guidelines and the rules that I go over, every day, twice a week after week, month after month. So anything I can do to help, let me know. I'll be here. Have a good night, everyone.